Hi guys, I'm Karunya Rao and in Ideas for Profit, all eyes on Goldiam International. Now since our recommendation in the Discovery series in April 21, the stock has almost doubled. The company posted best ever quarterly sales in Q1 FY22 driven by strong consumer demand. Its strategy to increase online sales and foray into lab-grown diamonds has led to a strong improvement in financials over the last 2 to 3 years, and it will continue to drive the performance even going forward. And hence we recommend investors to add the stock to their portfolio. It's been a record quarter for Goldiam in terms of sales as well as profitability. Sales reached 151 crores in June quarter, driven by strong uptake in jewellery demand in the US, both from retailers as well as end customers. EBITDA margins improved strongly both YOY and QOQ basis, driven by high share of lab-grown diamonds and increased online sales, both of which are high-margin businesses. Net profits more than doubled QOQ, while it was 10x of the profits reported back in June 2020 quarter. Demand from its key market, US, which contributes about 90% of revenues, continues to be strong. Robust consumer sentiment along with strong economic growth outlook is likely to boost jewelry demand. Furthermore, the US has vaccinated 60% of its population, which is likely to virtually eliminate the risk of lockdown restrictions should there be a surge in COVID-19 cases once again. Goldiam currently has an all-time high order book worth 260 crores, about 65% of FY20 revenues, which provides healthy growth visibility for times to come. The company has plans to continue enhancing e-commerce sales and reach a higher number of retailers directly compared to the wholesale route that's largely followed at the moment. Goldiam has launched its own website, jewelfleet.com, which is a B2B e-commerce website on which its consumers can directly place orders. Apart from that, the company would also sell its products on e-commerce sites of its retailers, thereby enhancing its overall online business. Online business has advantages of high margins with direct reach to retailers and lower working capital cycle. Now, this would ensure better profitability and return ratios for the company going forward. The share of online business has already reached 20%, and the company aims to enhance it further from these levels. The trend of lab-grown diamond jewelry is catching up quite rapidly and gaining a fair amount of traction. Lab-grown jewelry has already reached 3% of the global jewelry market, and it's expected to reach about 10% by 2030. Apart from environmental advantages, given that these diamonds are manufactured in labs and are not mined, they're also cost-effective. They cost about 35 to 40% lower compared to natural diamonds. And Goldiam is among the few companies globally certified to make these lab-grown diamonds. Now, lab-grown diamonds and lab-grown diamond jewelry have a better margin profile of about 30 to 40% at EBITDA level. Goldiam recently ventured into manufacture of large cartridge diamonds, which yield higher realizations as well as margins. The share of lab-grown diamond jewelry has reached about 15% of the turnover, and the company is aiming to further grow the sale. Recently, the company also increased stake in Eco-Friendly Diamonds LLP, which is a subsidiary company manufacturing lab-grown diamonds. The stake is increased from 51% to 88%. Goldiam boasts of a strong balance sheet with zero net debt and cash equivalents worth 300 crores as of June end. It recently announced a share buyback program where the company plans to buy back about 3% of the current equity capital. The buyback is at a price of 675 per equity share, and the company would utilize about 45 crores worth of cash for this buyback program. In view of record Q1 results, we've raised our earnings forecast for Goldiam. At the current market price, the stock is trading at a PE of 19x its FY23 projections, and Goldiam is a niche jewelry manufacturer focused on export markets with product profile of lab-grown diamonds and selling narrow range of diamonds to established retailers. Faster than expected ramp up in online and lab-grown business along with the recent buyback program can lead to further increase in the earnings estimate and drive re-rating of the stock. Therefore, we advise investors to continue to add the stock to their portfolio.